GDP growth and economic performance. Economic activity weak or uneven. Recent data show Canada's economy contracted slightly, 0.2%, in Q4 2025, indicating volatility and weak momentum heading into 2026. This drop followed expansions earlier in the year and suggests structural challenges, not a full recession, but modest growth overall. Medium-term outlook. The Bank of Canada projects modest GDP growth of about 1.1% in 2026, reflecting ongoing trade disruptions, slower population growth, and uncertainty in global markets. Inflation is expected to remain near the 2% target. Inflation and monetary policy. Inflation near target. Inflation has eased and is stabilizing close to the Bank of Canada's 2% target, though food price inflation and housing costs remain notable concerns for households. Monetary policy stance. The Bank of Canada continues to emphasize its flexible inflation targeting framework and may keep policy rates stable for now, balancing inflation and growth risks in a highly uncertain global environment. Currency and trade. Canadian dollar weaker. The Canadian dollar recently weakened against the US dollar despite rising oil prices. Geopolitical tensions, e.g., Middle East instability, have boosted demand for safe haven currencies like the US dollar, outweighing some commodity gains. International trade developments. Major trade deals in progress. Canada and India agreed on a significant mineral and uranium deal, $2.6 billion, and plan to deepen economic ties, including aiming for a comprehensive economic partnership and boosting bilateral trade to $50 billion by 2030. Supply chains and partnerships. Quebec and Germany signed multiple agreements to strengthen critical mineral supply chains, signaling growth opportunities in strategic sectors like EVs and renewable energy materials. Government economic actions. Support for industries facing trade pressures. The federal government launched a regional tariff response initiative with over $13 million in investments to help businesses in British Columbia and other regions adapt to evolving global trade challenges, boost productivity, and protect jobs. Labor force strategy in key sectors. A national coordinated action plan has been introduced to address labor shortages in mining and critical minerals industries, a sector contributing significantly to Canada's GDP and key for future energy and technology markets. Housing market trends. Housing prices forecast. The national average home price in Canada is expected to rise moderately in 2026, about 2.8% year over year, with slower growth compared to previous years as demand and demographic trends evolve. Structural economic challenges. Longer-term growth concerns. Analysts and policy institutes have highlighted Canada's relatively slow per capita growth compared to peer economies and have called for tax and structural reforms, Big Bang tax reform, to unlock stronger long-term growth. Economic transition pressures. The Bank of Canada warns the economy will need time, possibly years, to restructure in response to trade changes, technological shifts like AI, and demographic trends, with potential temporary pain for some sectors. Summary. Canada's economy in 2026. Pros: inflation near target, strategic trade agreements advancing, government support for industries and labor. Challenges: slow GDP growth, currency weakness driven by global risks, structural pressures from trade shifts, demographics, and productivity.